as over the past week, with all three major indexes appear to have moved to lower ground. In this report, we are to discuss the financial and fundamental environment surrounding US stock markets and the earnings reports released. We make a start with the Fed's monetary policy, given that currently it maintains a tight financial environment around US businesses. The market seems to solidify its view that the bank has to reach its terminal rate, yet the high interest environment seems to be maintained for a prolonged period. Following the release of the US preliminary S&P PMI figures, we may see the case being made for a more aggressive stance to the bank's monetary policy. The better-than-expected figures may imply that the US economy is still resilient, in spite of all the odds, and may warrant further tightening. In our opinion, the resilience of the US economy presents a challenge to the Fed, as the financial indicators may imply that inflationary pressures may not be going away in the near future. As such, we believe that the Fed may opt to hike by 25 basis points in their next meeting, with the accompanying statement appearing to be predominantly dovish in order to offset the market reaction. However, we must stress that the majority of market participants are anticipating the Fed to remain on hold, with FFF currently implying a 98% probability for the Fed to remain on hold. In conclusion, the predominant opinion is for the Fed to remain on hold, which could weaken the dollar and as such may provide support to the US equities markets. However, should the Fed take the markets by complete surprise and hike, we may see a stronger greenback weigh on the US equities markets. Alphabet, the parent company of Google, posted an earnings report for Q3 yesterday. The company posted better-than-expected earnings results, with revenue coming in at $76.69 billion versus the $75.96 billion expected figure, and earnings per share of $1.55 versus the expected $1.45 per share. However, despite the better-than-expected results, Google's stock price reacted unfavorably following the earnings release. The negative impact on the company's stock price appears to have been attributed to the company's lower-than-expected cloud computing sales, which may have weighed on the company's stock. Overall, the company's stock may be weighted down for the near future, but given its better-than-expected earnings report, it may find support in the long run. Microsoft released their earnings for Q3 yesterday, with the company, according to FT, posting a jump of 19% in revenue from its intelligent cloud unit, which has been attributed to the company's collaboration with Oracle. Furthermore, the company announced that its free cash flow rose by 22% to $21 billion in the company's last quarter, which may have been aided to the company's decision to invest in AI startup OpenAI, the creators of ChatGPT. The continued growth experienced by the company could provide support for the stock price in the long run, and we anticipate that to be the case. However, in the event that the company's revenues take a hit, it may weigh on the stock price in the future. We expect today the market's attention to turn towards the releases of McDonald's next Monday, Pfizer on Tuesday, Paypal and Airbnb, and Wednesday, Ferrari, Starbucks, and Coinbase on Thursday. We'd like to highlight the earnings by McDonald's and Airbnb, which may provide insight to the spending habits of consumers and as such may be of interest. Hence, we may see market attention shifting towards the US tech sector in the next week, given the high-profile companies of the US equity sector that are due to release their earnings reports. Thank you for watching.